Angelo, this has been a bumpy year, both up and down in most asset classes. So, what has been your message to some of these family offices over the past quarter?
Yeah, I mean, the whole year for the most part has been tough. To me, you have to look at the bigger macro picture in terms of what's happening with interest rates. We mentioned inflation, which again, I'm not believing the government's numbers, especially for a family of great wealth that is expending on assets and resources and simply expenditures as I described. Now, in theory, at the level of wealth that they have, with some dry powder to invest in things that are down, they do have, you would think, time horizon on their side. They should have liquidity. They should have some dry powder. And at that level of wealth, they could withstand periods, perhaps even multi-year, where assets that historically have been up and look promising are in a very volatile period. There's a war going on, inflation, interest rates, massive government deficit and debt. There's lots of problems. Let's not try to sugarcoat it here. There's lots of problems. But a family that's investing for the long haul, I was going to say 5 or 10 years. I'm not so sure that I don't mean 30 to 50 years. And again, this is not an average investor or family. You're asking me about the $750 million plus crowd. That's different. So yes, they should have a cash, bonds, real estate, public equities, but they absolutely should be investing in private companies, whether directly, depending on their experiences and whether they want to be engaged at that level, or through a private equity fund. They absolutely should be looking towards the future and being active, in my opinion, in venture capital, biotech, AI, longevity. There's just so much out there from the perspective of what's happening. And again, a lot of my experience that we didn't even really dive into yet is what's happening broadly in Web3, in crypto, in NFTs, in DAOs, in the metaverse. This is not going to go away. These are going to be massive, very volatile. For sure, there'll be losers, and there'll be some utterly massive winners. So families need to look at it from a long-term perspective. Now, that ties in the level of talent they have, who they're outsourcing to, and how that internal talent is being compensated. And is it fair both to the family and to the executive, especially if the family has a longer term perspective? How is that executive who's very talented running money? Let's go with that word. You may be pulling them from a private equity shop. You may be pulling them from an investment bank. You have to make it attractive for them, looking at it from a long-term perspective in terms of compensation. So unfortunately, a lot of family offices fall into mediocrity. They are very far from optimal, and they're not even close, many of them, to being, top 1% implies that you're better than 99 out of 100 others. So the reality is only 1 in 100 is going to be, quote unquote, that top 1%. But out of the thousands of family offices out there, what I love to do is I want to identify those top 1%. What is the family doing? What is the executives doing? Why are they so good? Why are they both effective and efficient? And what could I learn? And by meeting and discussing with other amazing family offices, what could I impart to them? That may be one little tweak that they could do to be, stay ahead of the curve, to be still at that top 1%. Most would be happy to be top 20%. That at least means you're good. But I would like to hope you're only going to have, in my opinion, a family office if you desire for it to be great. And to me, that may mean being top 1%.
Angelo, what is the most common reason that some of these family offices get stuck in mediocrity?
It's a great question, because often they created this great wealth, usually, not all the time, but through a family business. And they worked hard. They made the right decisions. And often it took generations, although now with tech companies, maybe that happens a little quicker. And they ran it with rigor, with quantifiable metrics. And somehow, so they have a liquidity event. Let's make it simple, whatever, $1 billion. And now, like, oh, we're really rich. So I tell them, if you decide on a single family office, and it's not always the best decision, but if you do, what I just told you before, if you want it just to be okay, then please don't hire me. I want you to have it be great. You have to run it kind of like you did the business, which obviously, if you sold it for that amount of money, you were doing something right. So now the family business, I think it's a pretty important one. In my example, it's managing your $1 billion. Yet somehow, what usually happens is the patriarch or matriarch will hire an existing relationship that they trust. And trust is very, very important, very important. But that person may not be optimal. They probably should be a short-term opportunity to get the family office off the ground, to know what's working, what's not working, and then to likely have a transition to become more institutional and more rigorous. I would argue, do it right initially. Set up the right structures in the right domicile, have it be most tax efficient as you can make it, and try to bring on the best talent that would work well in the culture of the family office as possible. You may need committees and boards. Again, I don't want to bore the audience with too much from how that interplays and how that plays out and setting up a private trust company. And I've been the biggest believer, and we'll talk from, say, a US family, is, yeah, sure, you want to be strategic in terms of where it could be domiciled among which state. Is Texas best? Is South Dakota, New Hampshire, Florida? Why not? There's lots of factors that play in. But I've been more and more active in, for families at the level I'm talking about, should also create international structures. If you're gonna do a family office, especially initially, that's the best time to do it really, really right. But even if you have an existing family office, wouldn't you want to go from being in the middle of the pack to being a little better, and keep on working towards at least being in the top 20%? And there's enough best practices, thought leadership, and research, and me and others out there that could definitely help to make that happen. But it is a little shocking how most, I guess by the law of numbers, most are going to be kind of in that middle and not so bad, not so great either way. But I would say it's the lack of rigor, of focus, of institutional approach, of quantifiable metrics that are important. It can't all just be qualitative, although that is absolutely a part of it. So doing it right apparently is very, very hard for many. And hopefully me and selectively others around the world look to change that.